Hi, welcome to another Prospectus review video. My name is Jermaine, co-founder of the Learn, Grow, Invest community. Today, we're going to be reviewing the PBS, that's Productive Business Solutions Preference Share Offer. So we're going to go through the prospectus. It was released last Friday. So we're going to, as usual, we're going to go through the details of it, let you know the highlights, explain the offer. A lot of us haven't heard about preference shares before. We haven't spoken about it, at least on our channel before. So we're going to explain what that is and then, just talk about the details of the offer. We also will have the ability to speak to the CEO of PBS. That's tomorrow. So be sure to join us for that as well, just in case there are any questions that come up as we go through this prospectus review. So as usual, we're going to ask you to, like the video, share the video with those who may be interested in learning more about this offer. So let's just get started.
Learning is a key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome again. Let us pray. We thank you, Lord, for this day. We thank you that we have the ability to learn, grow, and invest. We pray that you will bless us with knowledge, wisdom, and understanding. In Jesus' name, amen. All right, everyone, welcome. Let us know if you're joining us for the first time. Just leave a comment or type it in the chat. Let me know that you're joining us for the first time. If you are, welcome. For all our usual persons, thank you so much for being back. Let me share my screen. So before we go into this, I want to highlight the fact that this review is sponsored by JMB Moneyline. More details about them in the description. So if you want to learn more about Moneyline, you are actually able to apply for this offer using JMB Moneyline. So we'll get to those details later, but I want to thank JMB for partnering with us for this review. So I have to say, of course, that everything that we discuss here is for education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell PBS or any other security. I am not a licensed financial advisor as at the point of this video. So just bear that in mind. You want to speak to a licensed financial advisor before you make an investment decision. So what I'm sharing here is just the format that we typically do for these reviews. We're going to take some time to learn about the company, talk about their history, the products and services that they offer, just the things that would be important to just understand the breadth of the company. PBS is one of those companies that not a lot of us hear about, but they do a lot and they work with a lot of companies. And you'll see as we go through it that there's a lot to know about them. And next, we'll get into the details of the offer, how many shares are available, how much they're trying to raise, and so on. We're going to get into that. We'll look at the financial highlights. So what we've started to do is we've found that the prospectus review is not really enough time to go through and learn and dig into the financials. So we're just going to cover the highlights in this video. We're going to talk about their dividend policy. So because this is a preference share, it's typically very attractive in terms of dividends. So we're going to speak about that, let you know what to expect there. And then we'll close out the session with talking about how to apply. So, and after which we'll take any questions that you may have. All right, so PBS, they represent over 100 leading global technology brands seeking to do business in the Caribbean and Central America. Some of these companies include Apple, Akamai, Cisco, Dell, Fortinet, HP, IBM, and all of the others that you see there. So they lead leading institutional clients throughout the region. And I'm going to go through a slide where I share just a list of some of the brands that they work with and represent. They work with also banks, retailers, telecom companies, energy companies, and governments. And it says here that those entities trust PBS to provide mission critical enterprise information technology solutions, right? So think of them as a technology solution and service provider, right? So PBS offers these clients a range of information technology, networking, printing, and security products and services, and they generate their revenues from these activities that are mostly in hard currency and diversified geographically and by product, right? So that's at a high level, but we're going to get into some more details about them here. Right, so it says here that they provide, again, as we were following from the previous slide, so selected examples of diverse business activities will include maintenance of a network of over 3,200 ATMs. So it's very likely that if you've ever gone to an ATM, they would be responsible for the maintenance of that ATM, and that's how I actually first heard about PBS. Next, you have management of over 75,000 devices across 850 stores for a Fortune 100 retailer operating in Central America. Next, we have maintenance of over 33,000 installed printers across the Caribbean and Central America. There's the operation of a two-way radio platform for the oil and gas industry in TT. So some of these things, of course, I'm seeing right off the bat that I'd like to hear more from the CEO about when we speak to him tomorrow. What are some of these companies? Next, we have management of an electronic bank statement delivery for a leading regional bank in the Caribbean, implementation of the national ID card system in Jamaica and Barbados. So that for us would be the NIDS system. So I definitely want to learn more about that. You have ownership of SurePay, that's a bill payment system in Barbados. There's a design of tax collection platform in El Salvador and facial recognition software for Honduras. So you're just seeing here just the breadth of services. And one of the things I think about with a company like this, when I see services like this, the first thing I'm thinking of is if they do it for one company or one country, they're likely to be able to do it for others. So that presents them with opportunities to be able to expand. Because if they have that expertise, if other governments need those services, then they can simply work with them to get it. So these are some of the partners and suppliers that they have. I mean, these are names that some of you may know, others of you may not. But if you're in the technology space, like I've been for the last 20 years, you would know most of these companies, or you'd have at least seen them or seen their brand somewhere. So the ones that you may be most familiar with: Xerox, Oracle, Cisco, Microsoft, IBM, Lenovo, Dell, HP, etc. So they're very diverse in terms of the partners and suppliers that they work with. In terms of products and services now, it says a company offers a wide range of products and services on behalf of its brand partners and suppliers to customers across information technology, networking, printing, security systems, and advanced services. So they sell these products outright, as well as increasingly provide ongoing services and other forms of recurring revenue. So if you think about it, they're able to sell and provide that product and then have the contract to service those products, they'll be able to make money in both ways, right? So it says here on the IT side, that's information technology, software, servers, cloud services, laptops, and infrastructure. So let's say that a company wanted to purchase some new computers, some servers, other infrastructure. They're likely bid for these projects or supply these items and then have a service contract with the company. On the networking side, switches, routers, gateways, access points. Again, if you don't understand any of this stuff, it's okay. Just think about the infrastructure that you would need to manage an organization or government or company, right? Next, we have maintenance and services. That's endpoint maintenance for ATMs, point of sale systems, graphic arts, and other services. And you're seeing the icon here says PBS Professional Services. And what you see on their website is that you have like the the solution side and the services side. Next, we have advanced services. That's office and graphic arts equipment, supplies, paper, finishing, labels, etc. And these would be two other brands that they represent for that segment. Then in the printing space, software engineering and development, training, consultation, IT support, help desk, performance analysis and monitoring. And then finally, security systems. Those are checkpoints like you'd have at the airport, X-ray systems, explosive detection systems, cavities, images, drugs, identification cards, and software. Right, so you just kind of understand the breadth of what they offer. It's a lot of products, a lot of services, and they're actually spread out across a lot of countries across the Caribbean, and I'll get to that map shortly. In terms of their customer base, these are some of the customers that they represent, and these are the industries as well. So they have, it says here more than 12,000 accounts in the Caribbean and Central America. So these are just some of them here, probably the most notable ones for the different countries and segments that they work in. So you get the idea that the company is well spread out and diversified in its products, services, and customer base. Let me actually bring up the map that I spoke about. So this is on their website. That's grouppbs.com. So this is showing here just a map. Let me try and zoom in here, so you can see it a lot better. So you're seeing Bahamas, Haiti, DR, all of these countries in the Caribbean and all the way down to Colombia, and it shows the different subsidiaries here to the bottom left. I'll link the website, but it's grouppbs.com, where you can go and learn more about the company. They have their go back to reset here on the company page. You can see the board of directors, so the management team, learn all about the company, etc. I recommend that you do that. You want to learn about the company before you consider an investment with them. And then the products and services section, we just looked at that. There you can go and see the products and services that they offer. So it's definitely worth checking out. Be sure to do that after this video. All right, so let's talk about the offer. Thank you guys for posting your questions in the chat, by the way. I will get to them as soon as I can. All right, so at the end, we're going to take as many questions as we can. All right. So in terms of their existing share capital, that's what we're looking at here. So they're actually they have a preference share listed on the stock exchange already. That's what you're seeing here. That's 9.75% cumulative redeemable preference share. So it's saying here there are 25 million shares out issued for that. They have common shares of 186 million. So that's their existing shares, and then the shares being offered now. We have two types or two tranches, and we're gonna speak to them a little bit more as to the minimum amount, the price for each, etc. But authorized just mean they can issue up to that amount. So what they're issuing now is just a subset of that overall amount, right? So they've authorized 5 million in the USD preference share, and they're issuing just $1 million, but up to 1.5 million if the offer is upsized, right? And then on the JMD side, 5 million shares authorized. They're issuing 150 now and 300 if the offer is upsized. In terms of the offer itself now, so it's two separate offers, two currencies really. We have the USD side, so we have a reserved pool, and you all understand what that means because we cover that all the time here. So for those in the reserved pool, interest rate they're paying on the share is 9.25%, and this is the overall interest for the year. So if they're paying per quarter, you can calculate 9.25% of the amount invested, and that is split over 4 payments, right? The price is US $10 per share, and they're up to 700,000 shares here. And on the general public side, same interest rate, same price, and then 300,000 here, subject to an upsize of 500,000, right? On the JMD side, you have the reserve pool, 10.5% in terms of that interest rate. Price is 1,000 Jamaican dollars, right? So what you're noticing in here already is that it's not your typical IPO price. So preference shares are different in that regard. We're going to speak to that a little bit more later. But the price per share is 1,000 Jamaican dollars, and the interest rate you get on that each year is 10.5%. For the general public, 150,000 shares, subject to an upsize of 150,000. So in terms of the details now, typically we like to go over this information, pay attention now. While I don't think that we're gonna have this one being oversubscribed on day one, you do want to be aware of the opening date. That's August 12th, that's this Friday. Closing date is stated as September 9th. Minimum subscriptions, remember we spoke about the two different buckets. Minimum number of shares that you can purchase on the US side is 10, and the share price would have been 10, so that's $100 minimum there, and 50 on the JMD side, with $1,000 being the cost per share, so it's a 50,000 minimum on the JMD side. Subscription price, that's listed there below. In terms of basis of allotment, when the offer is closed, that will be shown within 7 days of the closing date. So whenever it closes, so assuming that it closes on September 9th, 7 days after, that's September 16th. In terms of refunds, if applicable here, it would be 10 days after September 9th, and the listing of the shares. Now, I didn't actually see this in the prospectus, so I'm assuming that it's a standard here, where it's no more than 5 days. I'm sure it's probably in the prospectus, I just didn't locate it. So just in case this is wrong, you can just double check to be sure. In terms of how they're going to use the money, now this is what they've listed in the prospectus in terms of use of proceeds. So it will be used to fund the company's strategic growth objectives and opportunities, including acquisitions and expansions into new territories. Now, this is extremely vague, I must admit. So this is one of those things I'm hoping to ask the CEO about tomorrow, to give us some idea of at least the industry or the type of acquisition they're looking at and expansion. Now, the assumption is it's gonna fit into some of the existing products or services that they offer. So I don't want to speculate here, but let's say in case you have a service provider or product provider that they would like to incorporate, they may be using the funds to now acquire that company or something, or to just expand into the countries that they're currently serving. So something to that effect, right? So that's what they've said, and we hope to kind of get some clarity around that. All right. So the company is estimating that the net proceeds of the invitation will be approximately $10 million US. And I'm sorry that I didn't put the JMD amount, but that's over $1 billion Jamaican dollars. And it would be US 15 million if upsized, and $50 million JMD, up to 142 million if upsized, after deducting, of course, once there's a listing or an offer, there are going to be expenses that are there. So they're showing you what those expenses are projected to be. All right. So yeah, let's move on to the next part. So let's talk about at a high level their financial performance now. So what they've done here, and all of this information that we're going through is in the prospectus. So we'll actually go through the prospectus at the end to kind of, tie in some other things that may be interesting to share. They've shared here their revenue distribution per company. So you're seeing here, I'm focusing on the larger percentages here. So Trinidad here would be 26%, then Costa Rica, Guatemala, Nicaragua, Jamaica, Panama, those would be the top areas in terms of revenue diversification. But of course, there are in other countries. Usually when we see a graph like this, we look at opportunities for growth, where they're getting most of their revenues from, and we like to usually understand, I guess, what is maybe the dominant product or service in those countries, and how they see opportunities to expand and grow those areas. Again, this is one of those questions that we'll be able to ask the CEO tomorrow about this current diversification of revenue and where they see opportunities to improve this in terms of revenue by product line. And I thought this was interesting to share for us to get an idea as to how their revenue comes in, or what makes up that overall number. So 97 million US is IT in terms of that product line. 9.5 million is advanced services. So advanced, we have to get some more details into that. We don't really know what that entails, but you can imagine, since we're talking about technology, that maybe some of the higher end services. Networking is 6 million US. So that would be all the networking products and services. Maintenance, 25 million US. That's definitely a significant number there. And printing is actually 85 million. So that's a big chunk of their existing revenue. So IT and printing serve as the top two, maintenance third, advanced services next, and networking last. Right? In terms of how they've grown their business over the last few years, they have a compound annual growth rate of 20.6% from their JSE IPO in 2017. So we're seeing here that growth from 15.2 million all the way to 32.3 million. So that's what they've been growing at for the past few years. So we saw here just 2019, 2020 were about level, and that makes sense because of the pandemic. A lot of maybe services got pushed back, products maybe would not have sold in the same way. We can get some insight into that at a later point, but then we saw excellent recovery and growth for 2021. So that's good to see. And in terms of now their gross margin and EBITDA margin. So gross margin is a straight line, and the dotted line is EBITDA margin. So we've seen where that has been between the range of 35% and about 43%. And it hasn't gone below that since about 2015. So that's good. That means their gross margins are pretty much, within that same band. That's good. That's good to see. And their EBITDA margin has started at 8.8% in 2015 and is now 14.4%. And then this is speaking to their cash flow or cash flow from operating expenses. So that's what we're looking at here. So what you typically want to look at is how these things are trending. So of course, the reason for doing like the preference share, for example, is to get cash in. So that would likely now adjust how this would look for 2022. But taxation paid is there, interest paid. So based on the fact that they're issuing preference shares, you're going to see interest being paid out, because that's now a commitment that they're making to shareholders to pay dividends consistently. Repayment of lease liabilities for the last 3 years. In 2021 was 3.4 million here. Capital expenditure ended at 5 million last year. It was actually up to 6.4 million in 2020. And then free cash flow has been, for the last 2 years, around the 6.6 million mark, right? So they had good free cash flow in 2019, but of course we have been in a pandemic for the last 2 years. So you'd anticipate some impact there. And in terms of their recurring revenue, they say to that. So outright sales equipment has grown. So it's currently at 121 million, and then recurring services that represents 46%. That's 102 million, right? So that kind of gives you an idea as to the makeup of their revenue. What amount is from recurring services? What amount is from sales of products or equipment? So a significant portion of PBS's revenue is recurring, and that's what you're seeing here, close to half. It is derived from renting equipment, supplying parts or paper and maintenance under multi-year contracts. So those contracts are going to be important, and they actually have a part in the prospectus where they show their material contracts. So we'll have a look at that. And they're showing here the mix in terms of hard currency. So 41%, that's 91 million in terms of US. 9% is in Jamaican dollars, just about 20 million. And then the other currencies make up about 50%. All right, so let's talk about now their profit and loss. So over the last few years, and I'm happy that we're able to see the last 5 years. You usually want to look at that range. So revenues have grown from 171 million here, and this is all in US dollars, by the way, to 223 million. I believe this is their largest revenue to date. Gross profit is pretty much around the 40% mark. For the previous 4 years, for 2021, it's actually 35%. So there has been, that's maybe about an 8% drop. That's what you're seeing there. I'd be interested to find out what would have led to that. Maybe the notes speak to it. I didn't read all of it just yet, so we'll kind of go through that and see if we can get some color as to what would have led to that decrease. Because even in 2020, when the pandemic happened, they were at 40%. So would really love to see how they go with this year, because you want to at least ensure that your gross profit is stable. Now, this is the first year, so I wouldn't necessarily be too concerned about it, but understanding why would be helpful. In terms of other operating income, was 744,000. Selling, general and administrative, this is showing a negative here, or is it just listed differently? I think it's just listed differently as an expense. Sometimes that happens because it is an expense item, so that's likely what's happening there. So the Ebitda here is 32 million, which leaves a margin here of 14.4%. So that has been up from 9% in 2017. Then now, of course, depreciation, they would have had, equipment items that may be subject to that. So let's see, let's go to net income. So net income is actually 5.6 million, which would be, at least for the last 5 years, their highest amount of net profit. So that is definitely good. We'll usually want to look and see how that translates in terms of cash. But of course, that's going to be important for us to look at. So let's look at the balance sheet now. So in terms of their cash position from 2017, so 12 million in cash, and this is US dollars. They ended at 21, almost 22 million in 2021. So they would have had a low cash balance from 2018 to 2020, but that was, brought up again. Accounts receivable, one of the things that you want to watch closely for companies in terms of how they're managing their receivables is certainly something that we look at personally to see how it's trending. Now, it has grown by about 30% here, or is that 60%? 30 over 50? That's 60%, right? So I mean, this could be for a number of reasons. They do work with government customers. It could just be that amounts are outstanding based on contracts, etc. So the point is to note here, and the reason why we look at this is that if it's tied up in receivables, it's not cash in the company's hands. So they'll have to find a way to finance their operations and get cash in some way, right? In terms of inventory, that's more or less around the 40 million mark here. Contract assets, 8.7 million or 8.6 million, and other current assets, 14 million. PPE, intangible assets, are actually shown as 104 million. That's quite a growth here from 2020. So this may be something proprietary that they've built, maybe some system or something that has great value, 5 times what they had before. So it either means that it was built or acquired in 2021, or at least completed and recognized in terms of the balance sheet for then. So total assets here is 336 million. Hopefully you're all seeing this okay. Let me know if you can't. I can maybe try to go to the prospectus and zoom in. Accounts payable here is 47 million. Short-term loans, 32 million. Other current liabilities, 25 million. So their total current liabilities is 118 million. And so of course, if you look at current assets, if you remove inventory here, that's maybe about 132 million. Total current liabilities is 118 million. So I mean that's good there, at least to help cover that. But of course, the receivables now would impact their ability to clear their current liabilities. All right, let me try and bring it up since Sasheen is saying it's blurry. 1 second, guys. Let me just find this in the prospectus here. Am I on the right page? Yep, here we are. Let me know if this is better. Should be better at least. Go one more time. No, I have to go back down one touch. Let me know if that is better. Even when you're full screen, is that better now for you, Sasheen? Let me know. Should be a little clearer. If not, I'll link the prospectus and maybe try to follow along there. So borrowings here, 68 million. There's a bond as well, 40 million. As a long-term debt stands at 116 million. Then deferred taxes. So of course there's a lot of debt here to speak about, and that's actually one of the things they'll comment on the other side in terms of what they expect their debt to equity ratio to be at the end of this year. Because of course, going through this, you may be concerned in terms of the amount of debt that you're seeing. That is something that they'll speak to in terms of their projection on the next slide. So retained earnings, one of the things we want to highlight here is currently negative 2.6 million, right? So that is something that they haven't been able to, I guess, build up their retained earnings. Yes, they've been paying out those dividend payments in terms of the other preference share that they have. So that's something to just look at going forward. But the amount is increasing in terms of it went from negative 6 million to negative 2 million. So at some point that may become a positive number there. All right. So let me go back to this now. Is this one still blurry for you? Let me know. This now is speaking to their projected performance for 2022. So we did say that this year they realized their highest revenue to date. They're projecting to exceed that in terms of 300 million. They're expecting their gross profit to be about 101 million. It's actually now trending down. Remember, we mentioned it was around 42% coming down. So their gross profit margin is actually trending downwards. So that may be something that's, well, clearly speaking to their cost of sales. So I don't know if that is presenting maybe some opportunities for them to be a little bit more efficient there, but it all depends, right? There are so many services or products, etc., that may go into this. So that's something that you'd look at. SG&A would be 58 million, and so the margin here would be 0.6% higher than last year, and this is their projection, of course. So we'll see. And then net income is expected to grow from 5.6 million to 10 million. So that is actually excellent in terms of that projected growth. And this is what I was speaking to before, right? Because their current debt to equity ratio would be 1.7, and they're projecting that at the end of this financial year, it's going to fall, which means they're anticipating to clear some of that debt that they have. So the debt to equity ratio, I mean, equity would have increased here, so the debt to equity ratio will be trending down. This is definitely one of the areas we'll be talking to them about tomorrow to understand more about it. So this is one of the things that you want to look at for them. All right, so let's talk about their dividend policy. So it says here in the prospectus, and because this is a preference share, you want to look forward. This is one of the reasons why you would invest in in this type of company for the dividend payment. So you want to understand this policy very well. So it says each class, so remember there are two classes, will be paid dividends at the respective dividend rate, provided that the board of directors intend to consider dividends quarterly on the final business day of the issuer's financial quarter and commencing the first quarter after the issue date of the preference shares. In the event that dividend payment date is not a business day, the dividend payment shall be made on the next succeeding business day. So if it may fall on a weekend, you'll get it the Monday, right? Dividend shall be paid from the distributable profits of the company. And that's why you want to pay attention to the profits of the company, because if they're paying dividends from profits, then if there's no profits, there's no dividends, right? So that's something that you'd want to monitor. It's not that you just purchase the share and then just expect to get dividends in perpetuity. If you own the company or you plan to own the company, you want to monitor that and ensure that it's going towards expectations. Next, dividend shall be declared at the dividend rate at the discretion of the board of directors of the company, and such date for payment shall follow declaration by the board of directors and the company and process. Let me just say, typically when dividends are going to be paid, it's announced on the JSE and the date shared, etc. So we can actually look at how, let me see if I can bring up a previous announcement, since they already have a preference share. Let me just go to their news for you to see what it may look like. All right, so I'm seeing some of the questions, so I'll be sure to get to them as soon as I can, okay? All right, so let me show you an example of what one of their dividend announcements may look like. So it says, I'd advise that a dividend was declared on the sum of in the sum of 124 million to the cumulative preference shareholders on record as at June 30th, payable on July 29th. The ex-dividend date is June 29th. So that's what the announcement would look like. This is on the JSE website. So this is something that you can just set up like an RSS feed, or just check it every quarter to ensure that you understand when the dividends are coming in or when you should be expecting them. All right. One thing to understand here, dividends, is that based on the makeup of the offer, the word cumulative means if it is that a payment is missed, it is expected that you will get that payment at a later date. So it's not a case where it's a common share where if the company decides not to pay a dividend, then you just don't get a dividend. In this case, it is expected that you're going to get that 9.25% or the 10.5% every year. You may get it in 4 equal payments, you may get it in 3 payments, you may get it in 2 payments, but the point is you're going to get the amount that is promised based on the intent of the company, right? This is just speaking to their record of previous payments, right? So it's just showing here the amount in US dollars, total amount of dividend paid. These would have been paid to shareholders. These as well is just something to note. If it is that you're an existing shareholder, then you'd have gotten access to these payments before. This is on the Jamaican dollar side. So I mean, you're paying well. I should have done a calculation of the yield. I don't know why I never thought about that. But of course, they're already speaking to the percentage for this offer, so we wouldn't need to calculate that. It's 10.5% for the JMD and 9.25%. So you already know what those would be. All right, so we're going to talk about how to apply. Then we're going to go through some of the highlights of the prospectus. Then we take your questions. So in terms of how to apply, so it's currently available through JMB Moneyline and the Barita Boss platform. So this is in the prospectus as well. So since Moneyline is a sponsor, I'm actually going to see if we can bring that up on the Moneyline platform so you can see what it looks like. I think it should be listed there already. Just give me a few moments to bring that up. All right, so I'm in. I don't know why I'm not sharing my screen because this is a demo account, so I don't have to worry here, right? Okay, so I'm seeing it here. Let me share my screen. All right, so there's actually another offer on the market right now. So let me actually backtrack here. So I went to other services, I went to stock market summary. This is on the Moneyline platform. Then I went to buy stock. And then I went on the IPO, right? So if you scroll to the bottom of the list here, you're seeing the PBS JA preference share. So this is what you're seeing here. I'm not seeing the USD one. I'm just seeing the JA one, but you'd select that. Maybe it's because I don't have a US account here. I don't know if that's why. Then you'd select continue, just enter the amount you're interested in, and then just hit if there are any notes or details that you want to share there, and just hit continue. And that's how easy it is to apply. So it's on the Moneyline platform. If you're interested, of course, speak to your licensed financial advisor first, but just understand that you can go to JMB Moneyline and apply. Okay. So let me log out there. Let me go back to that. All right, and in terms of the stock exchange is going to be on the Jamaica Stock Exchange and actually the Barbados Stock Exchange. So if you are in those countries, you'd be able to I think it will be a cross listing if I'm not mistaken. So that's it. So we are going to go into the prospectus now. So let me actually just bring that up. Prospectus. So usually what we do is just kind of go through just the things that we did not cover that we think are interesting for you to see. So this is going to be a scroll through, and this is why we do the slides first, because the slides are simpler, easier to follow. So there's going to be some scrolling here, fair warning, and I'm just going to be going through anything that I think is necessary to share here. All right, so I'm going to just first go to this slide here, and this is why I don't like to scroll, because to me it just takes too long to get to the information that you need to see. But these are the details. So it says this is an invitation to the public for subscription. We spoke about these details already, but $1 million perpetual cumulative redeemable. And if you actually subscribe to our newsletter, we explain what that means. So perpetual means that it goes on in perpetuity. Cumulative means that, as I said before, if a payment is missed, you're expected to get that payment at a later date. and it is redeemable, meaning the company has the option to call in the shares, and then you get your original amount back. So I think somebody was mentioning something about that. I think it was Ingrid saying it's 15 years. So that's the length of the time that they'll have the option to call a preference share. So this is to be considered a long-term investment. So if it is that you're looking for dividend income, so one of the things personally I've looked at our market and said, there are no, I actually said it this year, I think that there is no company that's paying an attractive dividend. I'd love to see some double-digit dividend. This would provide that 10.5%. So that would certainly be attractive to a dividend investor. So let's continue. It says with no par value at a fixed price of $10 per share at 9.25%. And it's subject to the ability of the company to upsize. So they do have that opportunity to upsize, and of course it will be at the same rate. And then on the JMD side, 150,000 shares, of course at $1,000 per share, and it's 10.5%. And of course it's the same where it's perpetual cumulative redeemable. All right, we can get into some more of that tomorrow. There'll be someone from JMB joining us to talk a little bit more, just in case you don't understand clearly what that means. We can get into it in more detail tomorrow. And of course, as with all offers, there is a processing fee, $172 or US $150 to apply. So there is an application fee. So you have to factor that into your application. All right, and this page speaks to the different tranches that we covered. It's really, really hard to see. So let me try to zoom in again here. So this is what we were speaking about before when we would have highlighted the different pools. So this is just speaking to the details of the offer. You really want to get familiar with that. Let me go to the minimum, right? Because I think somebody was commenting on that earlier. Somebody was mentioning that they saw a minimum of 100. So based on this page, what I'm seeing here is minimum. So it says each application for the shares must be in multiples of 10 such preference shares, subject to a minimum of 50 shares. And so that seems to be speaking to the US side. It's multiples of 10 and a minimum of 50 for the JMD ones, right? So that's why I would have put that on the slide. So I don't remember who was saying it, that they saw the minimum being 100. So let me know where you saw that, right? So this is what it's saying the minimums are, right? Minimum of 50. Subject to a minimum of 100 preference shares. There you go, right? Shares multiple for multiple of 50, such. Okay, sorry about that, guys. I guess I must have read it wrong. So I think that was Cashwayne. Thank you for that. So that's that there. I see David in the chat as well. Thanks, David. David wrote an excellent article on this. David, if you're still here, I'll just ask you to link the article. Yes. So it would make sense now because it's 100. So I read it wrong. So 100 by 1,000, that would be 100,000. All right. So let's speak to. Let me just see if there's anything else that we want to highlight here. I'm just going through to see if there's anything that we need to share. So for example, I'm looking at this page. It doesn't say. I really wish they made it a little bit easier to read. It doesn't show here, for example, who the reserved. It says, okay, reserve share applicants. Those are pension funds, collective investment schemes, and other discretionary funds and portfolios for which JMB Fund Managers Limited is the investment manager, right? So JMB would be the one being able to access those reserved funds. Those reserved pools. Let me say it that way. Okay, right. Let us move on here. And this is a page that I mentioned where they will be listing from. That's a PBS team. I think they're actually having a kickoff in Jamaica right now. I think when I checked on their social media, that is what it said. So let me just scroll through here. This page, this is page 28, is speaking to the details of the offer. So if you go to that page, you'll see more information, but we summarize that for you already. I'm looking to see if they're okay. This is the redemption call option. So let us read that. All right. All right. So optional redemption notice, right? So we spoke about this. So it says the issuer shall have the right at its sole discretion to redeem on each redemption date as defined hereafter all or some of the preference shares. The redemption date shall mean 1, for the first time, the last business day of the financial year during which falls immediately before the 15th anniversary of the issue, and thereafter the last business day of the financial year which falls immediately before every 3 years thereafter, right? So somebody mentioned that already. 15 years is when they would have the ability to redeem if needed, right? And then redemption call option, to exercise this call option, the issuer shall at least 90 days prior to the redemption date inform all holders of the preference shares of its firms and irrevocable intent to redeem all or some of the preference shares as the case may be on the redemption date. Should the issuer exercise this call options, the share shall be redeemed and the issuer shall pay the preference shareholder accordingly on the relevant redemption date a consideration equal to the then current market price or the issue price, whichever price is higher, right? So for example, if it is that in the future, 15 years in the future, the market price is higher than the price you would have paid to purchase, they'll pay you that higher price, right? So that's actually a good thing there. Because of course, if it trades lower, then at least you'll be able to get back your principal. Of course, then you have to consider the value of money, etc. during that time. All right, I think we can move on there. Let me see if there's anything here that I want to highlight. I'm just doing a quick read to see. No, I don't. I think I'll go through that there. All right, let's reasons for invitation. So they did share some highlights in terms of overview of the market here. I didn't think we had the time to go through it. It shares their competitive position in the market here. Something that is worth going through. I would have summarized this part already, so you'd have seen all of this. This is a list of their subsidiaries. Again, I'm not going to zoom, but just understand that they are quite diverse in terms of the locations. Let's see here. This is a top 10 shareholding. All right, so I think that's it. This is the MD&A. So I'm looking for outlook, right? If they've listed or stated any outlook, usually we like to cover future outlook for the company. Let me see if there's anything that's stated here. Okay, I'm going to go through it only because I think we wanted to understand what might have led to that decrease in gross profit. I think we mentioned that. So let's see if they say anything about it here. All right. So I'm going all the way down to here where it says the projections for the financial year 2022 are based on their expectations that revenues, EBITDA, and net profits will be similar to their performance in prior periods, and thus will account for the majority of the increase of revenues, EBITDA, and net profits for the financial year. The balance of the projected improvement in their financial performance will come from from organic growth of their other subsidiaries, right? All right. So that's what they're commenting on in terms of their projection. Let's see here if there's anything. Okay, I think this is worth bringing up as well. So this will be the last section that we read through, just to get a good understanding. So it says this year they've solidified their position as the leading enterprise technology company in the Caribbean, with their highest revenue, Ebitda, and net profit after tax in its history. Their growth was broad-based and demonstrated the capability of the company's newly expanded platform, which now encompasses 19 countries, 2,100 professionals, and the quality of their earnings also continues to improve as IT, communication, security, and advanced services grow, right? At the scale that they have achieved, these lines of business often produce predictable recurring revenue, and we saw that mix in terms of recurring revenue and equipment sales. In terms of their Q4 performance for 2021, for the quarter ended, they achieved revenues of 76.5 million, an increase of about 53%, which means that the quarter that they're heading into is going to be likely their best one for the year as well, since that seems to be a good period of year for them. The fourth quarter was their best quarterly performance in the history of the company. And they're saying here for the 12 months, we went through those highlights already. So let's scroll down. So it's saying PBS's key wins for 2021 include the sale of high-end banking solutions for two of the largest banks in Central America, executing mission-critical printing projects for the presidential elections in Honduras and Costa Rica. All right, so that gives you some insight there. And it says they began to implement national identification projects in 2 countries and signed a major ATM service agreement with one of the Caribbean largest banks, right? So that's speaking to some of the projects that they've been able to do. In the public sector, the company provided special services to more than 400,000 devices across multiple countries. Then now in September 2021, they completed the acquisition of PBS Technology Group Limited, formerly Massey Technologies Limited. The acquisition added significant scale and shifted the product mix towards enterprise IT, communications, and advanced services, right? And then finally, it says they produced excellent financial results for 2021, and this demonstrates the capabilities of their integrated platform, deep relationships with global technology brands and the largest governments and companies in the region. All right, and they're looking forward to that growth for 2022. All right, so hopefully that was helpful. Let me get to some of the questions now. I think I might have covered all of them during the presentation, but just in case we missed anything, let's see. So Shanique is saying, thank you for doing this live. You are very welcome. This is what we try to do for everything that comes out to kind of educate persons to be able to make an informed decision. So you are very welcome. Question, if JMMB has it listed for a week and then say go IPO, has it later before open, is it better to apply first place that has it? Is this in relation to the preference share, Rohan, or this is just in general? In general, with offers, you want to apply. If you're interested, apply as soon as possible. Sometimes these systems may go down for various reasons, and so if you have the opportunity to apply, you want to apply as soon as possible. This, of course, assuming that you've done your requisite research and you're confident in moving forward. I think Rodcliffe is joining us from Portmore. Welcome, thanks for being here. Shanique is saying, my question, would it be best to buy this preference share in USD? Okay, so that is an interesting question. What I would say is one of the things that persons may do, and this is something that I do personally, you may find yourself saving money in USD. If you have savings in USD, and you have an opportunity to get 9.25% on that USD each year, that may be worth it, because the expectation is at least the US dollar should at least appreciate in value as well. The Jamaican dollar would actually be expected to devalue more than the US dollar. If it is that you think, because remember now, you also just have to bear in mind the period for which you have to put up that investment. So you have to determine if you don't think you'll need those US dollars, or if it is that you need, you have the ability to go out and buy. But based on the rate and the expectation of the growth of the US dollar, I think would be a good idea. Of course, this is not financial advice. Let me say that. Okay, Kashwin, I think, is answering Rohan's question. Let me read that again. Okay, yes, so it is definitely not first come, first serve. I think I was just answering from the perspective that if you have the opportunity to apply, just apply. It doesn't make sense to wait. Omar, you don't have Wednesday evening Bible study and prayer. Omar, I don't know if there's something that you think I should be doing. I do our stock reviews on Wednesday, actually. Bible study is usually on Fridays, or sometimes I have it on Monday or Tuesday, depending on my schedule. But I have no Bible study this evening, unless you want to invite me to one. That's fine. Yes, Sunshine City, excellent point, right? I've shown that it is available on Moneyline. You do have the ability to apply right now if interested. Do not wait until the opening day to apply. Usually, once it's announced, a day or two after, it's going to be available. When will the first preference share mature? I think you're asking about the one that's currently listed. Actually did not find out that. That would be good to find out. So Kashwin, I'll try and find out and post it in the comments under the video in a day or two. That would be interesting to note. I'm not sure. I'd have to look into that. So you think it will be oversubscribed? I mean, 1.9 billion, I think it came up to, I think I saw in David's article. That's not a lot of money, really. Okay, David is saying July 2024. So I think he was answering your question about the maturity date. Trying to get through all of these questions. Okay, cool. So I answered everybody's questions. Awesome. Let me find David's article for you right now. Let me find it for you right now. All right, so I just posted the link to David's article in the chat, and I'll put it in the description of the video as well. So guys, let me know what you think about this video. We haven't spoken about preference shares before. We actually did an IG live on it yesterday. If you haven't followed us on IG yet, be sure to check that out. Renee did that video. She just spoke about, the benefits of preference shares, what they are, how to consider them in terms of your investment decision. So check that out. And as I said, tomorrow we're going to have the interview with the CEO of PBS, so we'll get to ask him all the questions that came up for our review. So be sure to send us your questions either via DM or on Telegram or on Instagram or any platform, really. We check all of them and we'll ask those questions, or feel free to join us live and ask them then. All right, so everyone, thank you so much for being here. Really do appreciate you taking the time to be with us. And okay, let me answer these last two questions. So in this case, Shanique, for the preference share, they've given you the percentage, which is good. So to calculate the dividend for the Jamaica side, just multiply your investment amount by the percentage. So if you put in $100,000 Jamaican, then 10.5% would be 10,500. If they're paying it quarterly, then you'll be getting 10,500 divided by 4 is about $2,625 or something like that. You'll be getting per quarter, but the total for the year is 10,500 or 10.5%. On the US side, multiply it by 9.25. Again, you may want to just divide by 4 if they're paying it quarterly, and that's the dividend that you can expect. All right. What type of investor would you say this offer is for? It's for those who are looking for income from their investments. So some investors aren't necessarily concerned about capital gains as much. They want to preserve their capital and get income from it in terms of dividends. That's the type of investor that this would be for. Is the current preference share a perpetual one? And if so, and they decide to continue it beyond 2024, will the company be able to pay both sets? Well, the current one is the one that is on offer is perpetual. And the first option to call it would be in 2037. So if the current one that David is saying is in 2024, you just have to wait to see what they do at that point. I don't see why they wouldn't be able to pay both if it is that it came to that, but it's likely because that one is coming up for expiration why they would have raised this one now. But I think this would be an excellent question to ask the CEO tomorrow. But I mean, they're the best ones to answer that question, but I don't see why not in terms of that. Elaine, I mean, the prospectus reviews, we've tried to keep them under hour now. We start at 6:30, so it is now 7:37. So we're actually 7 minutes over. So I mean, 10 years to double your money. If you think about it, it may seem like a long time for you. So remember, there are different types of investments. There are different ways to invest. The truth is, there are some persons with their money saved in bank accounts that they're actually paying more in fees than in interest. For those persons, if they take 100,000 or 500,000, because remember, at the same time, you don't necessarily want to invest all of your money in the stock market or in just, I guess, regular stock, because capital gains aren't guaranteed. Dividends for common shares aren't guaranteed either. So if you have the opportunity to get a fixed payment, because what that's saying in this case, Elaine, is that if you'll take 10 years to double your money, but the alternative, if you have that money saved or you have that maybe in your emergency fund or some other asset, because think about it this way. You may buy a company and in 10 years that company is worth less than you paid for it. You don't know, right? There are no guarantees in investing. So 10 years is not necessarily a long time depending on how old you are or your reasons for investing or your priorities. So it's not necessarily a bad thing in my opinion. So yeah. All right, guys, so really look forward to seeing you tomorrow. We'll be interviewing the CEO of PBS tomorrow, so be sure to join us for that. Let us know if you're watching this on the replay and you have any questions. Post them in the comments and we'll get to them. Thank you so much for being here. I look forward to seeing you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.